Okay, so today we are here with the legend Mikey Taylor. We actually met, I think it was at Connor's wedding a while ago.
That's right.
Yeah.
That's right.
Mikey used to be a professional skateboarder, and now he is someone that I really admire in business and as a person. So let's just jump right into it. So
Let's do it.
you were a professional skateboarder, had a very successful career, and what made you go, you know what? I want to go into business.
Oh, that's a good question. There's a part of being a pro athlete that's really awesome because you have a passion that turns into a career.
Right.
But the challenge to it is it doesn't last forever, right? And for athletes, like we're so terrified of what life afterward looks like.
Yeah.
That for me, like that fear was like driving me to figure something out. And I didn't go to college, so I just kind of felt like I couldn't work for anybody. And if I wanted to make any type of money, I had to start my own company. Yeah. And so that's what threw me into the process of trying to launch a business. And then once I did, I was like, oh, I'm meant for this. Like, this is a perfect fit for me.
Yep.
And then it's been that way for about 12 years.
Okay. So your first venture was the brewery, right?
Mm-hmm.
And so what did scaling that look like?
Scaling, so the first company I started was St. Archer. And scaling it was probably different than what it should have been like. The reason I say that, we had a very unique experience where the second we opened doors, there was so much demand for our product that we just basically spent the next 3.5 years trying to grow to catch demand. And we could never do it. And that's not the normal experience for a business. Usually the first 5 years are you trying to, tell everyone around you, this is who I am, please come buy something from me.
What created that demand for you? What made your product unique in that way?
The product wasn't unique. That's the funny part. it was a mix of the right idea at the right time. So our whole outlook on the beer industry and what we were going to do was, in craft beer, everybody was selling the product. Right? It was like, how do I make this beer stand out from the rest? Mm-hmm. And how can I get like a specialty hops or do something rare? And we went, why don't we just focus on making the brand different than everyone else, make the beer good, and then, our plan was to promote the whole thing on Instagram. And so this was 2011, 2012, before influencers. Mm-hmm. And so we basically tapped into something early, which was we were going to promote all of our ambassadors and tell their stories. And we're not going to really talk about the beer at all. Yeah. It's just going to be presented by St. Archer. Yeah. And then that just caught on. Our brand exploded and everybody wanted to be a part of it.
I love
that.
And
it was radical growth.
I feel like so many people focus on having the most incredible product in the world. But I love that you kind of took maybe we'll call it the Beats by Dre approach and put that into beer. Like the headphones were good, but they had every influencer and every person under the sun to push it.
So it really started from the industry that myself, Paul, and Josh was our other partner, came from, where in skateboarding, there's only like 2 board manufacturers. Mm-hmm. 2 companies make all the boards. Mm-hmm. And then with the shoes, like there's no real difference between Nike and Adidas. Yeah. It is all branding. Mm-hmm. And so we just came from an industry where you had to create separation based on experience. Mm-hmm. So we just tried to apply our model to an industry that, had more potential of growth, and it worked. And it was at the right time. Like, that model back then, you couldn't do the same model now. Like social media is more saturated. There's influencers, in front of every brand now.
Everywhere.
So it was good timing too.
Yeah. Yeah. So moved out of skateboarding into beer, you scaled that, right? And then how did that parlay you into the real estate game?
Okay, so real estate started before beer for me, but it started passively. So prior to us starting the brewery, we started working on it in 2011. I turned pro in 2002. So from 2002 to let's call it 11, my whole plan was live off nothing. That was my whole thing, right? Yeah. Live off like 20, 25% so that I can get everything else invested. Yeah. And when I was on that path, I got connected with somebody who was investing in storage units. Mm-hmm. And so I basically went, okay, I want to do this. So I started, investing in their companies. Yeah. And I started having passive investments in storage, and then it went into lending. I started lending on commercial real estate through their company as well. And then we started St. Archer, and then we sold St. Archer to Miller Coors or Molson Coors. Mm-hmm. And then when I was thinking about the next company I wanted to do, I wanted it to be completely outside of beverage. Like I wanted to do something totally different. And so I landed on, I want to do multifamily. I want to do a multifamily, either syndication or fund, and create like an equity firm. And that's basically what I set out to do. I didn't really know what fund management meant back then.
Yeah.
But I knew how to run a business. I knew how to start a business. I knew how to run one. So I felt like it was the same game, just different players.
Right.
You know.
So you had capital, which was very rare for a professional athlete to go, I'm going to save every dime I make.
Right.
So kudos to you for that. So you had capital, and what made you go, I'm going to start a syndication as opposed to I'm going to invest my own capital and grow my own portfolio?
Yeah, it's funny. I have a friend. His name's Sean Baker. He's a family friend of ours. Owns an ungodly amount of units, right? And it's all his. Like no investors. And as I was doing like my research on like how I was going to create this company, I called him. I was like, Sean, you own like 3,000 units.
Yeah.
What do I need to know?
Yeah.
And he said the same thing to me. He's like, why are you starting a business? Like, why don't you just go build your own portfolio? And I was like, because I like business. Like, I like having to like build teams and go bring something to the market.
Yeah.
I think it just drives me more. And he's like, dude, if you do that, okay, that's crazy. Like, I would just do it yourself. And then he connected me with somebody who actually ran a private equity firm.
Okay.
And then I started talking to people. I was like, yeah, this is what I want to do. Like, I don't want to retire. I don't want to just like sit back and live off, my real estate. Like, I want to build business.
Yeah.
And so I went in to build a business, and then it's been almost 7 years now.
That's wild.
Yeah.
So you scaled, you built now a large syndication. What's next?
For our business, our current goal, current big goal is to get to $1 billion of assets under management.
Okay.
Right now we are managing about 250. And so if we don't change anything, like we just cruise control from this point on, we'll get there in about 10 years.
Okay.
Our goal is to get there in 5. I really want to get there in 3.
Yeah.
So that's like our, 10-year, but I'm really pushing hard to get there faster.
Yeah.
That's the goal for the business. And then, what we talked about earlier, over the last 4 years, we've been shifting our capital raise from, my relationships or my partner's relationships or going out and doing more conventional networking into raising money online. And we're at the point right now where we're about 55% of our capital comes from social. And so another goal of ours is by the end of the year to have closer to 90%, 100% of our capital come from social.
So for those that are listening, I want you to listen to these numbers. And this is what motivated me to make this new launch on social media. He's at, you said 60% from social media?
We're getting close to 60.
60% of his funds come from social media.
Right.
And as time goes on in my business, more and more of my business is coming from social media too. Right. And last time we talked, I was like, I'm not sure. Like, I kind of have my business set up where I'm getting referrals and I'm advertising hard and I'm doing well, but that is impressive. 60% of capital being raised from Instagram pretty much, or, TikTok and all that. That is just hard to fathom.
Yeah, you ready for this one? I was at a conference last week, the Limitless conference. This guy, Ken McElroy, puts it on. And I'm on stage speaking, and Brandon Turner, who was the host of Bigger Pockets for a long time.
Yeah.
And he started a company, Open Door Capital, maybe a couple years after we did, but somewhat in the same kind of time frame. And he was on stage, and people are tripping about what we're talking about right now. Like, you raised what on social?
Yeah.
Brandon raised almost $300 million in the last 3 years on Instagram. Isn't that crazy?
That is, wait, say that number again?
300 million.
300
He did
million.
over $1 billion of real estate basically through social media.
That is insane.
Yeah.
That is,
I know.
That's wild.
It's crazy. It's crazy. And now, the cool thing now, like, something I hear a lot when I talk about this is, but you have 1 million followers. Like, of course you can raise money.
Yeah.
The cool thing is when TikTok came online and it being a discovery platform. So what that basically means, your following means nothing. Like, you can have no following, put one video out, it can go viral and change everything just like that.
Yeah.
That's how TikTok works. And because it was taking over so much attention, all of a sudden Instagram had to rebuttal and create reels, and then YouTube had to create shorts, and you saw all of the platforms start to switch into discovery platforms.
Yeah.
What's encouraging for everyday people who don't have social media, you can start today and you don't need a huge following and your whole business can change. This is the best time to get started.
Ever.
Yeah.
Ever. Yeah, because I remember back in the day, like everything I did was door knocking.
Right.
And that's brutal.
I know.
I had to do
it for the campaign.
Yeah. I'd way rather be in the office with air conditioning with you shooting videos than be out door knocking.
That's right.
And yeah, it's
But it's just it's a numbers game, right? Like how many homes can you knock in an hour? I knew what we could do on the campaign, but how many can you do in an hour?
In an hour, I don't know, like 30 to 50.
30 to 50.
Like max.
Okay.
Max probably 30 maybe.
Okay.
Yeah.
In an hour, you and I could get about 100,000 people to watch us in an hour.
Yeah. Yeah, I believe that.
Spend an hour getting 50 or spend an hour getting 100,000.
Yeah.
It's not even close.
Yeah. Yeah.
You know?
And I think that is why more people need to focus on brand.
Right.
Because once you have something to push, you know which direction to go.
Correct.
For so long in my real estate business, I didn't have Shane Holmes full-fledged until like 5 years ago.
Right.
And now people think that's my last name. Like half the time people think my last name is actually Holmes. And if you're watching this, my last name is Dolgarov. You didn't know. And it's just like, okay, now I can make videos with my boy and we're not sweating. So.
Right. That's right. That's right. I think the other thing too to think of is for people who have a business today and they're not using social media. Social media can feel overwhelming and it can feel like you're wasting your time on something that's not important or it's not producing results, right? What everyone who has a business that isn't using social media needs to be mindful of is there's only so much time left where you can get away with it, right? Like if you look at Gen Z, you look at Alpha, all the new generations to come, social media is what they're born into. Like they understand social media like we understand walking.
Yeah.
The second they get into business, if you don't have a digital footprint, you will not be able to compete. They will put you out of business overnight.
Yeah.
And so I would really look at this window as if you don't get started, you have a clock that starts ticking and your business will not be here for much longer.
I could not agree with that statement anymore. Yep. And on the flip side of that, a while ago, I had an interview with like 5 older dudes to sell like this massive piece of land in Ojai. And I'm selling all the social media strategies. And what I should have been doing was focusing more on the conventional methods because the younger crowd that's up and coming, you can't touch them if you don't have social media.
Right.
And older crowds don't even know what Instagram is half the time.
Right.
And like I'm sitting here pitching how I'm going to get them so many views because of social reach. Right. And these guys are like, well, what does your Rolodex look like? I'm like, look at my followers. Like, you know what I mean? It's like, it's so funny how polarizing it can be.
Right. When they say, hey, what's your Rolodex look like? You say 30,000 people.
Yeah. Like it's here. It doesn't happen anymore.
That's right. That's right.
That's funny. So now that you're going from, no, I wanted to touch on something in your skateboard. So back when you were a skateboarder, were you crushing it financially, or were you just did you just do a really good job of saving?
A little bit of both.
Okay.
The first 10 years, I did a really good job saving. Like, you know, for context, most pro skateboarders don't make over $100,000 a year. Like, I would say the average pro skateboarder probably makes 50 to 60 grand.
Got
right?
it.
And then you have a very select few that make money.
Yeah. Right.
Maybe some of them make 250, and then a handful million plus.
Yeah.
But most of them do not make a ton.
That's wild.
I know. And then you add on the fact that, you know, the longer you stay in the industry, the harder it is to transition into real life, right?
Yeah.
So you're not really in a position where you've got the financial power that maybe a basketball or football player would have.
Yeah.
You're like, okay, crap, I don't really have any tools to like go out and work in the real world, and I don't really have any money to like get me through this.
Yeah.
What do I do? It's a pretty gnarly transition for most people. For me, the first 10 years I made nothing special. Mm-hmm. The last 5 years of my career, I had a shoe that like hit. Like I had a shoe that did really good.
What was the shoe?
It was a shoe on DC. It was a Mikey Taylor shoe.
Okay.
And so basically how it works, like skaters get minimums, right? And so I would get paid, like let's call it, I don't know, a couple $100,000 a year, right? And then you would get a shoe royalty, let's say 5%. Mm-hmm. But on most companies, you would have to sell over your $200,000 draw to then benefit off of anything sold over, right? I had a deal where I didn't have to pass the draw and the shoe just hit. So I had a few years where I was making pretty good money.
Yeah.
And then with St. Archer, that was money that we had never seen before. Like that was, I told this to somebody yesterday. I paid more to the government in taxes in 2000, it was basically 15, than I had made the 13 years as a pro skater combined leading up to that.
What a great problem to have.
Yeah,
it's
crazy.
I think it's funny sometimes when people complain about paying taxes. Like, yeah, no one likes paying taxes, and there's ways to avoid certain taxes. But like, if you have to pay that much money, like,
I remember my partner called me. He goes, "Dude, this is not cool. Like this check is not cool." And I said the same thing. I'm like, "Yeah, but you know what? Like, listen to us. Like, I'd way rather pay this check than like not and have none of the actual gains come in."
Yeah.
So yeah, it was good.
So as a goal of yours, because one of my goals is to continue building my passive income to the point where like I have the option to work, and I don't think I'll ever retire. I think I'll always sell real estate, just selectively to people that I prefer to work with. What is your end goal?
That's a good question. It keeps changing on me, actually. My end goal when I was skating and then post St. Archer was that. Like, I want to be financially free, and I want enough income coming in where I don't have to work. And that was my goal. And then I no longer became a pro skateboarder, and the company was gone, and I didn't have to work. And basically, I had two choices in front of me. One, like, I could have not worked, but we couldn't really live the lifestyle that we wanted to live. Yeah. It was like, okay, maybe we move and cut back and we hold here.
Yeah.
That didn't sound too awesome. And then the second part is like, it's like what you said. Like, I don't think I'm going to retire. I actually don't think we're ever supposed to retire.
I don't think so either.
And so when I went through that experience, it kind of changed my perspective a little bit. Now it's like, yeah, I want options, but I had options and I chose build.
Yeah.
And so I'm kind of at the point now where it's like, I'm just going to keep building business and try to make impact. And like I have a great amount of passive income coming in, but you got to be mindful of it. Like passive income is never going to compete with growth. Like growth will always be larger than passive income.
Yeah.
So when you're young, like at least my perspective is you should be in wealth build mode. Like build your wealth.
Yep.
If you're not ready, if you're not thinking about retiring at 35.
Yeah.
And then start picking over into cash flow. So I would say I had a big drive to get cash flow when I was skating. And now I have more of a drive to actually build wealth.
Yeah.
Strange.
I love that.
Yeah.
I love that.
And then I'll probably shift over, like just focus on cash flow again. I don't know, 20 years from now.
It's a cycle.
Yeah.
Yeah. Yeah.
Yeah, but right now it's like it's just wealth build.
Yeah. I agree with you. I don't think that going for me.
But you know what? But I do want to say this because it's important. That doesn't mean you don't buy assets that cash flow, right? Like cash flow is how you build stable assets that aren't, when done right, put at risk of going away.
Yeah.
So that is important, but our outlook on at least the wealth build is I want to find a distressed asset that we can build it into something. And so that whole build is our bump in appreciation, right? So we're saying no to cash flow today so that we're going to build to a new value, then it cash flows.
And then get
right?
the asset cash flowing.
So that is kind of what I mean by delayed gratification into cash flow. And then on the business, like now I have a big chunk of my net worth in the business we're building, right? So it's like, that's another wealth build. And then, I was big on lending and now I'm like, I just don't have a lot in lending now. It's like, I want to keep the appreciation going.
So did you go to college?
No.
No college for you. You're skateboarding and hanging out.
High school and skateboarding.
Love it. Love it. Yeah, I was pretty much very similar. I was a soccer goalie in community college.
Okay.
And then I was like, you know what? I looked at what the debt I was about to incur going into a 4-year college, at least probably $60,000 to $120,000 of debt for the next 2 years. And I already owned a business at the time. And I'm like, how does this math work?
Right.
This math doesn't work for me.
No, it doesn't work.
So I left. I wasn't liking, as a soccer player, your body gets beat up. I still have injuries. And I was looking at the long term. I was like, you know what? I'm going into business. Right. I'm over it. Yeah. Let's start something.
Yeah, that's right.
And I'm so glad that I did. So that's interesting.
Heck yeah. No, I skipped it.
Yeah, I find that a lot of successful people have, and there's such a stigma, at least there used to be, and it's kind of getting better now, that you absolutely have to go to college. And my parents were definitely upset when I said, hey, Mom and Dad, like, I'm sorry, I am not finishing college. Like
Yeah.
this is just not happening.
Yeah.
And but that ended up being the best thing I ever did.
Right.
Is that you feel the same way, or what's your sentiment?
Yeah, my parents were very concerned that I didn't go to school.
Yeah.
It's interesting because let's take the careers out where you have to go to school, right? If you're gonna be a doctor or a lawyer, fine.
Yeah.
Like go to school.
Go to school.
That's for you, right?
Agree with that. Yeah.
Other than that, what I think everyone needs to ask themselves is, what do I want to do? Like, how do I want to make money?
Mm-hmm.
And then ask yourself, does college help me get there faster and make more money, or does it not?
Yeah.
If it does not, I don't know why you go.
Yeah.
It makes no sense to me.
Yeah.
If, like, there's a lot of people that say, yeah, but like, I want to go to college, like, experience it and find myself. My perspective, there's a lot more cheaper options to do that. Like, go travel the world for a couple years.
Yeah.
It's going to be a lot cheaper, right? Or like go start interning, like go intern for people that are doing things or working in careers that interest you. Like start figuring this out first so that you can make the decision, is it worth me going into debt to go down this path?
Yeah.
Right? Because you hear the horror stories. It's like people are in debt and they're working a job that has nothing to do with their, degree, and it's like, why did I do this?
I would probably say that more people work in fields that have nothing to do with their degree than what they went to school for.
Correct. And the cool thing about right now is you don't need to go to school to make money. And so if it's not to make more, then I don't know, for me, that kind of took that off the plate.
Yeah. Yeah. I just remember like, okay, I'm going to spend all of this money, and I luckily already had some business experience, and I knew how hard it was to make that money at that young age. And I think that's where the gap is. It's like a lot of these people, you're going straight from high school where you don't have business experience into taking on a huge amount of debt, and you're just putting such a stipend on your cash flow.
It's changing, man. Yeah, I think we're actually going to start seeing a massive change happen.
Yeah, yeah.
Because we're at that breaking point. Like the cost of school is no longer worth the return, and people know. Yeah. Like you're watching the numbers like completely decline, and so it's like, what does that do? In theory, it should force schools to either produce a higher return or bring costs down. Like that is their only option. It's
crazy. We're talking about these massive institutions becoming almost obsolete. You don't need that to learn.
Right.
Anything that I learned from college is, and same from like even when I went to real estate school, it's all crumble it up and throw it away. Like real life education is the only thing that has brought me any value.
Right. Right.
So moving forward, we know where you want to go business-wise in terms of scaling your assets under management. You want to basically triple in the next 3 years, or quadruple.
I want to do it in 3. Yeah.
In the 3 years, which I love to hear. Love to hear that. Where do you see that growth happening? What investing avenues? Actually, this would be a capital raise avenue. So where are you seeing that come from? Is it, I know we're scaling more on social now, but
well, for our business, we grow by acquiring assets, right? So you have to have deals.
Yeah.
For us right now, the majority of our deals are coming from multifamily.
Okay.
So let's see, in this next year, we're gonna have almost $200 million of development happening, like in next year. So we're already seeing the pathway to get there.
Yeah.
It's more deals, right? It's like finding deals and getting the capital at the end of the day.
Yeah. It's not rocket science.
No, it's just difficult to do, right? It's like, even like we were talking about this earlier, there's a lot more deals that we're finding, because look, our multifamily portfolio is focused on California. Like we go at undersupplied markets that need living, and we build apartments, right? So it's like, we know the demand's there. It's just there's challenge with the debt, there's challenge with equity, it's a challenging time to do it.
Yeah.
So it means you have to work hard to find those deals, but when you find them, it's typically good.
Yeah.
Yeah.
So
so that'll come. I think we're going to get there by and large from multifamily.
Okay. So pivoting off of that, you have created a massive brand. Everyone knows Mikey Taylor, especially if you live locally, your city council. What is the number one tip that you could give to either of our followers to help scale their brand?
That's a good question. This is going to sound so cliche, but it's you have to start.
Yeah.
Like, you just have to start,
Yeah.
right? Like, you know, we can get into like maybe some of the strategies, but at the end of the day, I have found so much success in just being consistent, right? Just do something and don't stop.
It's always the same story.
It's how it works. So I would say for somebody who wants to start building their brand, you have to commit to a consistency that you can uphold, right? If that means you're going to post once a week, that's what you need to stick with.
Yeah.
Right? If you're going to say, look, I got to do once a day, but in 2 months you're going to burn out and not do anymore, save the 2 months. Don't even waste your time.
Yeah.
Just find the number that you can basically hold on to and then do it, right?
Yeah.
Because at the end of the day, you're going to start and then you're going to learn things from starting to talk out and connecting with your following. And it helps you kind of hone in on what your brand's going to be.
Yeah.
But a lot of people kind of overthink it from the beginning and get stuck never starting. You just got to go for it. Pick up your phone, film something stupid, and put it out there, and do it over and over.
Yeah. I couldn't agree with
like,
that.
Just
anymore.
talk about something. Like, just pick a topic and talk.
Yeah.
You know?
Yeah. It's so funny. It's never rocket science.
No.
I secretly wanted to hear a red pill from you where we could just take it and blow up, but it sounds like we're gonna have to keep doing.
Look, I'll give you. I'll give you guys some. I'll give you guys some stuff that's gonna help. Right? You got to find something that you are good at, right? And that you enjoy doing. Like, you have to have a drive and curiosity towards it, right? When you have that, seriously, there are so many ways to do this. I'll give you one right now. Go on to Twitter. Look at what's trending. Find something that's trending and find a way for you to take what you're doing and plug it into one of those topics, right? Then you get to building your piece on it. The one thing you need to think of is that there's 1 million people to follow and everybody just goes like this all day, right? So the first thing out of your mouth better be stoppable. Like, it has to stop somebody from scrolling past you, right?
Absolutely.
The first 2 seconds are so important.
Yeah.
Find something that grabs them and then make it basically intriguing the entire way.
Yeah.
And you're gonna blow up.
So if you're listening, guys, you have to grab the follower
Yep.
because they are scrolling through tons and tons and tons and tons of content. And if you are not engaging within the first 2 seconds, you're done.
You're done. You're done. Don't start your videos off with, hey guys, how are you? Good. None of that.
Yeah.
Right?
Yeah.
The first 2 seconds should be, did you hear that the financial market is dead? Or did you hear that Harvard
Airbnb
went out of
is-
business? Did you hear that Airbnb is crashing, right?
Yeah.
Like, what can you say that's true
Yeah.
that's going to stop somebody?
Yeah.
That should be the first 2 seconds.
Yep. And I think what you said before plays into this so well because you said that you just have to start. And had I not sort of restarted my social media, I wouldn't have found that I enjoy this podcast style of shooting videos,
Right.
but also wouldn't have this piece of information.
Right.
So much comes from just doing.
Correct.
That people you don't learn because you didn't do it.
That's correct. That's correct. Here's another one. Now that you're saying this, I'm thinking about all this stuff. You don't have to be the authority, actually. Like, in certain industries you do, but with social media you don't. So for example, if you want to get started doing something, let's say you want to become a new realtor. Right? You can create content bringing people along the journey with you.
I like
right?
that.
Grab your phone.
Yeah.
Okay, I've always wanted to sell real estate. I don't even know how to do this. Like, let's go figure this out.
Yeah.
Bring the audience through this journey.
Yeah.
Hey, my mom knows this guy, Shane. Like, I'm going to see if I can go into his office. Oh my gosh, he told me I need to take this test. I need to study. Bring them with you. You're up late. Oh, I'm studying. This is brutal. I don't know how I'm going to do it. You take your test. You fail. Bring them into it.
Yeah.
Right?
Yeah.
What's going to happen is you're actually going to become a real estate agent. You're not going to know anything about selling. And you're going to have 100,000 people that want you to succeed that are going to be helping you promote your first deal.
Yep.
It's crazy.
Yeah.
And then all of a sudden you're hearing about people that have been in the industry 2 years and they're winning awards for selling more homes than anybody. That is because they have an audience behind them and they didn't have to be the expert to build it.
Right. So now that you have become more of the expert and you have scaled and you do have the following, do you find that the alternative is you now have, so like when you're getting started, you have people that want you to win. Now that you've quote unquote won at whatever that looks like and you have a bunch of followers, do you find that the opposite is true? That there's people that want you to fail?
Yes. Yeah. 1,000%. Yeah. You need that though.
Yeah.
I think that's actually something really important. If you don't have people that want you to fail, it's only a sign that you're not doing anything impactful.
Yeah.
That's the reality of it.
Yeah.
And so, I would say if you're looking at a blend, like some people say 50-50 is the right blend. You should have 50% of people hate you, 50% of people love you. That's a little too polarizing for me. Like, I think it should land around 70-30. But yes, like you want people to not like what you're doing.
Yeah.
And the other thing is like, a lot of times the people that like hate you and don't like you actually follow you harder than some of just the average followers. Right? Yes, it's crazy. So yes, I have that. You want that.
Yeah.
It can be overwhelming in the beginning, but when you start looking at it through the lens of they're actually a gauge that I'm doing something important, it makes it so that you're not taking it so personal.
Yeah. Yeah, and it's so hard not to take it personally.
It is. It totally is.
I just started getting a taste of that maybe a year or two ago, and it was so discouraging. But actually, we got lunch at Q, and I walked away with so much from that conversation that we had. I was like, you know what? That guy should hate me, and that guy should hate me. It's like, it's okay to have people that don't like you, because if no one dislikes you, you're not scaling.
Right.
They don't have anything to be jealous of if you're not working really, really hard.
Right. And I think the other thing is if everyone loves you, like you have to ask yourself, like, am I really just being myself?
Yeah.
Right. Or am I being this fake person that is doing whatever they can to get people to like me? Like that's not a good place to be. And it's not a good place for business to be. It's not a good place for like just your life in general. Like you want to be somebody. You want to like stand for something. And I think you want to know who's really with you and who's not. Yeah. Right? Like if somebody's with me because like I'm being fake to them, like, are they really my friend?
Yeah.
No,
when
they're not.
SHIT hits the fan.
Yes. You want like the real ones rolling with you. So it's like, get out there, like be yourself and like be okay with people not liking you.
I had the hardest time with that up until like pretty much this year, where I finally just accepted, you know what? I am Shane Holmes. This is my brand. This is what we're doing, and nobody's going to get in the way.
Yeah, correct. Totally. And you get better at it. I think that's something that's like important to know. Like it gets easier. You get more tough in a sense. And then it stops hurting.
Yeah,
but in the beginning, it's normal.
It out a little bit.
Totally. Yeah, like people are, and then look, you get to a size where like there's so many comments. You're like, it's impossible to see them all. Like I'm not gonna go through these like 6,000 comments. Like,
oh, that's funny.
Yeah, there's probably a hate there, and I'm good.
Yeah. Oh, I love to hear it. Yeah, when we sat down for that lunch, I walked away feeling so relieved. I was like, oh wait, this is okay.
Yeah, that's right.
This is a good thing.
Yep, that's right. That's
so
right.
Funny.
Honestly, we'll start looking at, for everybody listening, that if you don't have people that don't like you, you're actually doing something wrong. Like that's actually like a poor way to build. Yeah. So I think it's just a good like reframe.
Yeah, because from my experiences, your brand is who you are.
Correct.
And it has to piss some people off at some level.
Correct.
Because if you don't have that uniqueness, you don't have a brand.
Correct.
You're just blending in with all the other.
Yeah, and look, you'll never have people that love you. That's the other thing. Yeah. Like, if you're gonna sell anything, you gotta have people that are like really, really behind you. And if people don't hate you, you'll also not have the opposite of people loving you. So you gotta have that.
Our first steps into becoming a millionaire.
The first steps were starting investing. Like, the $1,000 invested in the S&P, like just basic stocks and bonds. That was my first start. I funded a Roth IRA. I created a SEP IRA. It was like just very conventional. Yep. And then as I started building more money or saving more money to be able to invest, I started investing in storage units like we talked about. Yep. And I got to a point where I was right at about a millionaire prior to starting St. Archer. Okay. And then when I started my first business, that's what took it to the next level. So basically, for anyone who wants to become a millionaire, this is the whole key. Start when you're young. Like just by the sheer numbers and how compound interest works, if you invest a few $100 a month and you do that for 10, 15 years, oh my God, you're going to retire with almost $2 million just based on time in the market, right? That's a very lazy way to do it, actually. Yeah. You want to start getting there quicker? Well, building a business building a business creates more millionaires and definitely more billionaires than anything else, right? Like, we talk about real estate. real estate, I guess, does create the most millionaires, but business creates the most billionaires.
Yeah.
And so if you want to build something at scale and get there fast, like you're going to create a business. But really, at the end of the day, it's just start investing.
Just get your money in the market.
Correct.
If you're watching this, guys, get your money in the market.
Correct. And then house hack, I would say. Like, that's a big one. Like, yes. I bought my first house.
Let's hear it.
I always talk about this. Me buying my first house was the biggest mistake I ever made in my entire investing journey. I wish I wouldn't have done that.
Really?
Yeah, no, I wish I would have skipped it. The reason I bought a house is because I was told that buying a house is your best investment, right? So I'm 22 years old, they're giving loans to anyone. I'm like, cool, like 5% down, I buy my first house.
Yeah.
Right? And then I own the house for 15 years. Doesn't really give me much tax efficiency. It brings in no cash flow. I bought it before 2007, so I got no appreciation in it.
Got it.
And I'm sitting here going, well, what is this thing really doing for me? Like, why didn't I? The reason I didn't, because I didn't know any better. Why didn't I house hack? Why didn't I buy a duplex, a triplex, a quad, live in a unit, have the people around me help pay my rent or pay all of it, step out of there, have a cash flowing asset, and then do it again and do it again, right? Boom, I just didn't know the difference between owning a primary and owning investment properties. I thought they were one and the same. I really, really wish I would have house hacked. If I would have house hacked, that would have been huge.
Yeah. I was almost getting ready to argue with you because you were like, I wish I didn't buy my first house. And I'm sitting here, my first house was duplex. And I house hacked the shit out of it.
That's right. I wish I would have done that.
I bought a 2-unit in Newbury Park. It was a single family with an ADU. I rented out the ADU. I had someone renting a bedroom from me in a 3-bedroom house, and I had the ADU. I lived there for free.
You're rubbing it in right now. You're rubbing it in. Yeah, that one I just didn't know.
Yeah.
Look, if the argument really is, if you're somebody who's never going to invest in an investment property, right? Buy a home and live in that home. Let it be your automatic savings account. 1000% do that.
Yeah.
But if your goal is financial freedom and you want cash flow and appreciation, house hack.
Yeah.
House hack the first one. Wait on the primary, and that'll create millionaires.
Yeah.
Yeah.
I'll give a little piece of advice for anybody that wants to learn what the cheapest way to becoming a millionaire is. In my opinion, that is go buy a duplex or a single family house with a garage that you can convert into a rental. Okay. You need that little income piece, especially with how high rates are right now, in order to have positive cash flow. And had I never touched that model that we just talked about, I wouldn't be a millionaire. Right. There's no way. Right. I wouldn't even be close.
Right.
I'd have nothing.
Right. That's a big one for anyone. That is the way to go.
Okay, let's talk about another piece here. What did you say? What time do we have?
3:08.
We're good.
Okay.
Said the first house. When you became a millionaire, do you say what age?
You don't need to. We don't need to get into it. Yeah, I think he said 22.
What about everything you own?
Say that again.
How many houses you own? How many?
Oh, yeah, we can talk about that.
Okay. So, what kind of assets do you own on the? Maybe I don't want to ask you that directly.
How many properties do you own?
Yeah. Okay. So, what is your? I know you have the business side. What does your personal side look like in terms of investing?
Now?
Yeah.
Everything's in the business.
Everything's in the business. You don't touch anything yourself.
Not anymore.
Got it.
No. Now, if I'm going to do something, we just went through this recently. We sold an office space, not in our business, and exchanged it, and then basically put it into the business so we can manage it. So it's, because my business is investing in multifamily and storage, those are really the two asset classes that I want anyway. And so it's easier for me now to put assets that are managed by our entire team.
You already
than
scaled.
me to build it. Yeah. So we have our storage portfolio. We have about 8,500 units.
Okay. Holy shit! I'm like, okay. I'm like 8,500 units.
Our storage side is starting to get pretty big. Yeah. Our multifamily portfolio we just sold to actually, but we're in the middle of developing about a couple hundred units in California. Okay. Which a couple hundred units in California is about equal to the value of all the storage units. Yeah, there's a lot to build multifamily here.
Yeah.
And then we have a lending portfolio as well. So we do lend on commercial real estate also. And so all of my real estate that I own is now passively invested. And then I have, how our company works. I have equity in the business. In Commune Capital, I'm a principal in that business. And then we have assets that we manage.
Yep.
And so the majority of my real estate is managed by the business. So I sit on, I own equity in the properties and I own equity in the business.
Okay.
So it almost makes, it's just, that's the way I should do it.
Yeah. So do you own any real estate personally anymore? Or,
Nothing anymore.
Just your house and you're chilling.
Yeah.
That's wild.
Yeah.
See, my brain is so the opposite.
Yeah.
I'm just like, dude, how many houses can I get? How many houses can I get?
Yeah, but like how I look at it is if my view is how many can I get, this is how I do it.
Yeah.
Right? Because me personally, I only have, if I'm doing everything myself, the opportunity I can capture is based on the amount of money I have. Right. And that's it.
Right.
So what that's really saying is I don't have a lot of opportunity. But if my opportunity is based on how much money I can raise, that means I have a lot of opportunity.
Way more.
And so that's where I kind of tend to want to be now.
Yeah.
And it wasn't always like that. It was the opposite. Like I wanted to own my own assets and I wanted to invest passively. Now it's like put everything in the business.
Yep. And just scale that sucker as big as you can.
Yeah, because it's like, look, can I get to $1 billion myself?
Yeah.
Or can I get to $1 billion through the business faster?
Yeah.
I can get to $1 billion. Yeah.
Yeah, easy answer.
Yeah.
So out of all of the stuff that you invest in, I think this would be a good one that the followers want to know about. Which asset class produces the most cash flow?
Out of all of them or out of the investments I do?
Everything that you have, what is the best cash flowing ordeal?
Out of all of the assets that we have, there's one storage property that cash flows out of this world. But storage tends to cash flow pretty well.
Okay.
So our storage portfolio cash flows well. Our multifamily portfolios, we focus on California. California is not a cash flowing market. And so we'll try to build something to a 7, 8 cap. If we're looking at all the assets, this is something we were talking about earlier. I mean, dude, short-term rentals cash flow like crazy.
Yeah.
We don't do short-term rentals, but up until this point, they cash flow like crazy.
Yeah.
And
I
mobile home parks tend to cash flow well. There's markets on different asset classes that cash flow better than others, but we typically want to be in either an appreciation market or an appreciation market with cash flow, like a hybrid almost.
Got it. So why is it that you didn't touch Airbnb? I have my own reasons, but what have always been your reasons for hating Airbnb? Maybe not hating, that's a strong word.
That's a strong word.
For disliking Airbnb.
Okay, so there's a handful of things. One, I don't invest in single family.
Okay.
So that kind of took a lot of it off the plate. Now, there are people who do multifamily that have some of the units be short-term rentals, right? The reason why I never got into it was a handful of the expense fee on management is through the roof. Like I cannot justify paying 30%. It's insane.
Yeah, it's ridiculous.
The amount of time and energy it takes to manage that property, it's more of a hospitality play.
Yeah.
I don't like hospitality for that reason. And then I would say the big one is I don't like being in an asset class that everybody can go after. Like I like being in an asset class that has a high barrier to entry and keeps out a lot of people. And Airbnb, honestly, like you just saw a whole influx of everyone going after
who owns a house.
Right. So what that means, at least for me, now I'm going to be basically bidding on properties with the person next to me who has no clue what's going on.
Yeah.
That person's most likely going to get emotional and pay too much. And now I'm sitting here going, I can't get anything to work here. That's not where I want to be.
Yeah.
I want to be investing with the big players.
Yeah.
That go, this isn't emotional for me. This is number based.
Yeah.
Period.
Yeah.
That I think I do better there.
Dude, I think that you hit that absolutely nail on the head. If you're a busy person, like I always tell, like I was telling Eric earlier, I already have a job. Running an Airbnb is a job. You are taking your time because it's very time intensive and you're getting a monetary return from it. I already sell real estate. I have my non-passive coming from that. I totally agree with you. I'd rather just have the more effortless long-term rental pay me less money and I'm okay with it.
Right.
I'm totally okay with that.
Right. I love that.
Okay, so we nailed that was a pretty good one.
Can you talk about Ryan Pineda, Grant Cardone? That'll help.
Someone that we should like.
Yep. What do you want me to say?
Maybe both. anyone else that you've had some crazy experience with, a funny story?
Okay.
Yeah, what's something that'll tick the algo a little bit? What do you think of Grant Cardone?
I like Grant.
Yeah.
Like I like Grant.
Why are you smiling?
Because Grant fits the mold of what we spoke of earlier. There's people that love Grant, there's people that hate Grant. Like he fits that, like, this is me.
Yeah.
Take it or leave it.
Yeah.
I like it. Like I think Grant is funny. Every time I'm with him, I just enjoy him. Like he is so funny. The first time I ever met Grant, I flew into Florida and I meet Ryan, who is his kind of like right-hand man, Ryan and Jared. And they walk me in, his door's open, he's on the phone and he's playing with these chips, like Vegas chips, right, in his hand. And he looks at me and goes, right, Mikey, come on, right? And he's on the phone on speaker.
Yeah.
And I'm just listening to him, and the guy's basically trying to sell him on selling an asset. Grant, this is what they're offering you. I can't even remember the number. They want 200. This is such a good deal, and the guy's just talking to me, and Grant's just sitting there, right? He's looking at me, and you just hear Grant go, nope. And the guy goes, Grant, it's 200. You bought it for 75. What are you doing, Grant? This is such a good deal. Like, how are you not selling? Grant just looks at me. Nope. Right? Grant, you gotta be kidding, dude. This is 100%, right? And finally, Grant goes, it's 250 or nothing. Hangs up the phone.
That's so funny, dude.
And he looks at me, I'm going, what did I just witness?
Yeah.
And he goes, nothing that's forcing me to sell. Why would I sell?
Yeah.
And it was just like damn, you're correct. Like, right. Like, if you don't have to sell, why would you take anything less than astronomical?
Yeah,
right?
yeah.
Right. Grant's funny, man. Grant's funny.
What is he as educated of a real estate investor as you'd be led to believe from social media?
Henry Ford, long time ago, there was a whole lawsuit. And basically what they were painting him as was somebody who wasn't equipped to run Ford. So he's putting his shareholders at risk because he wasn't capable of doing it.
Got it.
And so the whole court case is people asking him questions on cars, right? How is this car made? I don't know. How is this done? I don't know. Basically, every response out of his mouth is, I don't know, right? And they're like, see, he doesn't know what he's doing. Like, he should not be running this company. And then he says, I'm kind of paraphrasing, but he says, why do I need to know everything about a car when I've got a button on my desk and when I hit it, I have the expert that knows more about that part than anyone in the world that says, this is how it works. And I have that for every single person in the business. Why do I need to know about all that stuff? Grant has a really good grasp on that type of outlook. Like, I do not need to be in the weeds. Like, I am here to drive the vision forward. And I have all of these people in place. And that's what they're there for. Like, he has it's why he's scaled the way he has, because he's not in the weeds and he knows better, honestly. And that's something that he told me a long time ago. Like 5 years ago, he's looking at me going, you're too in the weeds. You're way too in the weeds. Here's another Grant story, right? Grant calls me, he's like, hey, I'm gonna be in LA. This is when he lives in Florida. I'm like, all right, cool. He's like, I'm doing this like seminar, like you should come. I'm like, all right, I'll come. So I come, go to the seminar, and then we go to a house that he was renting that night. And he's like, Mikey, how's business? Like, what's going on? And we were in the middle of a capital raise for a project we were doing in Ohio, right? Let me hear it. So now I'm pitching our project to Grant, right? And he goes, all right, cool. Who's raising the money? I'm like, I am. And he goes, why? I'm like, what do you mean why? And he goes, why are you raising the money? I'm like, you're not raising money? He goes, I'm not raising money.
Yeah.
And he looks at me and goes, Mikey, you're too in the weeds. You're way too in the weeds. Like, you need to be up here and you need to be focused driving the rest of the team with you. That's where you need to be. Don't be here, be here.
So from all your followers, for all the followers that are watching, how do you get out of the weeds?
Oh, it's what I'm gonna say sounds simple. It's harder than you think. But the very first thing, you have to put people in place to replace you. You have to. For me, what that means, I'm not an operator. So I know what my skill is. I know what my weakness is. The very first person I bring on is an operator. It's a COO, first and foremost. I have to have somebody run the business, right? And then if I have somebody running the business, and let's say I'm focused on capital raising, right? The next thing to do is bring on somebody to basically be in charge of the cap raise. I am not in charge of that. And you put people in place that then can manage the 4 below them. And that's the spiral. It's fours, 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 right? And you sit at the top managing those 4. That's how you do it.
That is so helpful to hear.
You know, for the solopreneurs, the people that are starting something early, the struggle you're going to have is you're making all this money, right? Because there's not a lot of overhead. You're the person. And so when you hire somebody to run it, what you're saying to yourself is, I'm not making all the money right now. You have to be okay with that. And so if you're making your $400 a year and it's just you grinding, what I would do is you're now going to make $200. And you're going to put that other $200 into an operator. And you're now going to make less money for a year, right? And then the next year, maybe you get closer to $300, right? But now the business is generating more revenue. Now you're hiring more. Now you're hiring more. And before you know it, you're 5 years out, you're making $1 million a year and you're barely working. That is how it goes. But most people won't say no to income today to create more income in the future. Most people just don't do it.
I 100% agree with that, because that's kind of where I'm at.
Right.
Like, I've just started delegating advertising, like our team that's here right now, and same with all my print and everything. It's all completely outsourced. I don't look at anything anymore.
Right.
And just that was such a hard leap for me to take.
Right.
But from that, what I was talking about earlier today, and I hate to admit this, I kind of bought my entire mornings back. Now I'm in the gym, I'm with my family,
Correct.
I'm working half days, and I'm making the same amount of money, which is, I hate to admit that I'm working less, but my quality of life is so much higher because of it.
Yeah, but look, this is what ended up happening though. You now opened up new avenues for more people to make money. Right? This is capitalism at its finest, right? Like, why do business owners get so many incentives? Because they create jobs. Right? Job creation is phenomenal. And when you really do it right, you're giving upside to the people around you. And now everybody's got potential to earn.
Everybody's
that's
winning.
how it's done right.
Yeah. I love that idea, and I'd love to continue scaling my team too.
Yeah.
I'm still in the weeds setting open houses.
Right.
My weekends are spent setting open houses, and I would love to not do that. And from our conversation here, I should probably stop.
You should have the goal of you are the person who just walks in, everything is done, and you're the Shane's here. Right? How are you guys? Thank you so much for coming. I just want to appreciate you. We're gonna do a video and post. Everyone's going, wow. All right, guys, love you guys. No, I know this house is gonna fly off the show. Somebody's gonna get it. It's gonna be you later. Right? That you become that figure where you're popping in, popping out, and you have the team that's in charge of the whole experience. Other than that, they set it up for you. I experienced the same thing on the campaign. Right? I had a team, and basically their job was to run everything, and I was just to show up. Right? I show up, I do my thing, and I'm out. And they handle it all. Like that's where everybody starts really making strides forward.
So when you're hiring these people, what are the key characteristics that you look for?
Hiring's hard, actually. I would say hiring's a tough one. It depends on the role. I would say I'm a lot more in charge on the initial hires. And where I'm at now, I have my COO, or maybe the position we're being hired, they're interviewing them. First interview, second interview, then I'll just come in and almost like green light it unless some red flag pops up.
Got it.
But in the beginning, for an operator, I'm looking for somebody who's very, very different than me. Like, it's typically not, an extrovert. It's not a vision person. Like, I want somebody who, as I'm talking about what I'm doing, they're going, well, what this means is this and this and this, right? So I want a different thinker. I want to see like good experience in with past careers or past employers.
Yeah.
I'm really big on the person also. Like, I want to know how somebody operates in hard times.
Yeah. And
so I'm typically trying to ask questions like, talk about a couple of instances that happened that were like, tell me about something that went wrong.
Yeah.
And I just want to know what their thought process was and how they solved it. And that's that. I mean, that in a nutshell is it. And then, I'll just ask them questions and like, I'll do a little bit of testing. Like, what do you see in the market right now? Like, what do you think the big risk is? And like, I know what the answer is. And if it's something way different that's not like interesting, then maybe they're not in touch the way I need to be.
Yeah. So closing question, what is the big risk in the marketplace right now?
Oh, in my perspective, it's refi. I think the refi risk is the risk right now. So it's short-term debt. right?
Yeah.
So like, well, gosh, hang on. There's a few things. No,
No,
okay.
no, can.
Stabilized assets are basically off the table right now, unless you're buying them debt free. Like, you know, in a lot of cases, the interest rate is higher than the cap rate. So you have a negative cash flowing property. So if you're coming in all cash, fine. Value add opportunities. Typically what you're doing is you're taking on short-term debt to, you know, juice the value up, and then you're going to refi in. It's that refi that's the risk, because we don't know what the Fed's going to do.
Yeah.
Right? And as everybody should tell, the Fed hasn't done what you thought they were going to do over the last year.
Yeah.
Right? So what that means, us as a company, we're staying away from bridge debt. We're putting, you know, mini perm or long-term financing on the beginning, right? And so that means we're putting a lot more equity in.
In more cash, yeah, that's what I was
A lot
gonna
more
say.
cash. Yeah, you can't put your 10 or 20% down. Like you're putting, you know, typically at the floor 40%.
Wow.
And then, you know, in some cases we're looking at like C-PACE finance, that's 60% down.
Yeah.
Right? So it's a lot of equity in. That means your return is being adjusted. But we don't want a refi coming up that's going to challenge a great property from going away.
Yeah.
You know, and that's what I think the risk is.
Yeah.
And then if you own assets, I think some of the people that got into real estate over the last 3 years, I think you're going to start seeing assets taken from them.
Yeah. I
Yeah,
agree
so
with
I think
that.
there's going to be a buying opportunity too.
Yeah. Mikey, absolute pleasure, my bro.
Heck yeah.
Yeah.
Thanks, brother.